Hello guys and welcome to another episode of An Alien's Journey. Today we're going to see an interview that I did with David from Click and Close Mortgage. In today's video we're going to discuss about Houston real estate market and how is it doing compared to the national averages. We're going to discuss about the mortgage products that David can offer and how he can help you finance your next deal on the front end or on the back end if you're an investor, and if you're buying it with hard money or private money, he can help you with the refinance. And we're going to discuss a little bit about the market trends, what we've seen in 2024 and what we're expecting to see in 2025, and how we are making plans and adjustments in order to make sure we make the best out of it and we make it our best year in real estate yet. So stay tuned to it and I'll see you at the end of the video for some more tips about it. Let's dive into it.
Hey, this is David Wynn with the Mortgage Edge podcast, brought to you by Click and Close Mortgage. Today, I have a very special guest from Houston, Texas, Daniel Tanasa. Daniel, welcome to the show. How you doing, brother?
Well, David, doing good. How are you? Good to have you.
I'm good. So, our podcast, we bring top realtors from across the country on there. You've been a top realtor for quite a long time now. So let's talk a little bit about your journey and how you got started. How long have you been a realtor, Daniel?
Yeah, so I've been a realtor for about 2.5 years now, and I've been an investor for about 4 years now.
Okay. When did you buy your first investment property?
So I bought my first investment property in the beginning of 2021, in January 2021. Yeah, so almost 4 years.
Okay,
since I got my
I
first.
know, but our guests don't know how many investment properties do you have today?
So I have 18 rental properties right now, 18 single-family homes.
That's amazing. Let's talk about that a little bit. So 18 investment properties over the course of 4 years. That's a lot, man. You're buying one almost every 2 months. Let's dive into that. I didn't know we were going to go down this road, but I'd like to get into investing. I really don't have that much money. How do I get started?
For sure. So in the beginning, when I bought my first one, I just found me a real estate investor friendly realtor. I went on Bigger Pockets, found a realtor that way. She's my broker now, actually, and she's been great. And she was like teaching me or showing me around and everything and what I need to look into. So that was really appreciated because she guided me for the right markets and in the right area. I was looking at properties that were not really probably making the best investments long term. I was looking at property that would have cash flow best, but maybe it's in a war zone or in an area that doesn't appreciate. So that kind of insight helped me a lot. But yeah, for the first property, I just went the traditional route, bought it off the MLS with a realtor. I still try to do a little bit of investor hustle also. So I bought it a little bit in not the best condition, like it needed some paint, some floors. So I did a little bit of renovation on it. But yeah, that's pretty much how I bought the first one. And then from there, I kind of started doing some more advanced stuff a little bit. I start looking into like the BRRRR method. That's been a great one for me. Like lately, I use the BRRRR method for most of the properties that I'm buying, unless I have an option to buy it with seller financing or take it subject to the existing loan and get a lower interest rate that way. But if none of those is an option, I would probably, the BRRRR method is my go-to, and I'm buying it usually with private money, fix it up, rent it out, then refinance, pull money out, and reuse the same money to buy more and more properties.
Let's talk about the BRRRR method. I know what it is, you know what it is, but a lot of our audience don't know this. It's kind of what you just said right there. Refinance it. So let's take me as if I'm in kindergarten, Daniel. What's the BRRRR method?
For sure. Yeah. So BRRRR stands for BEATS: buy, rehab, rent, refinance, and repeat. So basically, you go on the market or off market, wherever you're able to find the deal, and you look for a property that needs some work done to it to increase the value. So you're gonna buy the property under market value. Let's say you buy a property in a $250,000 neighborhood, but you buy it for $150 because it's in such a terrible shape. It needs a new roof, it needs paint, floors, some windows, whatever it is. So you buy that for much lower than market value. You put $30,000-$40,000 in the house. You buy it for $150, you put 30 in it, you increase the value to like $230, $240. So now you can go to a bank and get a loan and they're going to give you 75% of the appraised value, of the new appraised value. So if the value appraised for 240, they're going to give you 75% of 240. So you're going to be able to pull all your money out of the deal. And like that, you can reuse the same money to buy more and more properties, because if you need to put 20% down on each property you buy, you can only buy like maybe one house a year, two houses a year if you earn really good money, but you're not going to be able to buy as many. This is a way that you can reuse and recycle the same money to buy a house every 2 months.
So with that being said, so you're using a hard money lender to buy the house initially, is that correct?
Yes, I use quite a few hard money lenders, and now lately I'm using a lot of private money lenders, basically seasoned investors that have been doing what I'm doing now. They have been hustling for a long time, but they are now more passively. They are just like, yeah, I'm gonna throw some money in the market for the new investors, help them out, and they are like, that's the most passive side of real estate, because everybody says real estate is passive. It's not really that passive when you own a rental property, right? You still have to manage the property and tenants and all that stuff. When you lend money out, that's as passive as it gets. So pretty much, yeah, they are like older investors that they don't really want to deal with the construction, with finding deals and all that anymore, and they are just lending money out. So yeah, meeting people at RIAs and the networking events and stuff like that. That's how I kind of network with my private money lenders. And now pretty much I'm calling them like, hey, I have this house. I'm buying it for this much. The ARV after repair value is this much. It needs this much in work. Will you be able to lend me? And most of the time they're going to lend me the purchase price, the rehab money, the closing cost. So if I buy it right, if I get the house under contract for the right price, it's going to cost me zero money out of pocket from the first moment that I get the house. That I never put any of my money in. I'm saying refinance and pull money out, but I actually don't pull money out because I never put my money in, like the private money. So that's a powerful way to do it.
That's awesome, man. That's awesome. So let's rewind a little bit. What got you into real estate? What's your background?
Yeah, so I moved to the States. I'm from Romania originally. I moved to the States in 2018. I finished geological engineering in Romania, so I worked in oil and gas a little bit in Romania. Then I came here and worked in oil and gas for a company here in Houston. That's why I moved to Houston. Then actually, since I was in oil and gas, I already kind of like I was working in the field, but I felt like I want to do something more than just showing up at a new rig whenever a new job is happening. And I wanted to do something on my own. I was thinking about opening a business and something. So I started reading a lot of books about financing, about investing, about stock market, and kind of all the roads were leading towards real estate. I was really reluctant about going to real estate because I'm from Romania. Over there, we are building houses with brick and mortar and steel and like strong buildings. And here you guys are building these houses out of sticks. And I was like, I don't want to have anything to do with that. I don't know the market. I don't know how they are building. I don't know the building code. So I'm not going to touch it. But yeah, eventually, like all the books I read and seeing all the advantages you have over time, all the appreciation, the cash flow, the depreciation, the tax benefits, like I was like, yeah, that's kind of like a no-brainer. Probably I should start looking into that. So yeah, eventually I found a realtor, bought my first one and got hooked and went from there.
That's awesome. Well, I kind of know your story. You know, you kind of left there during COVID, and that's kind of when you started investing into real estate and stuff like that. So COVID was like a blessing for you. Forced you out of one career and into a whole new career that you didn't even think about. Now you're just flourishing. You know, you're unique in the fact that, you know, you became an investor, and then the byproduct of that was you're doing such a good job of finding your own properties that other people said, "Why don't you find me a property?" And now you're killing it on the real estate side of it. You know, so fast forwarded for 2.5 years. Where are you getting your leads, man? Because I mean, the market's been tough the last couple of years. There's a lot of veteran agents that aren't doing the kind of numbers that you're doing. What are you doing out there to generate leads and get referrals and close business as a realtor?
Yeah, thanks for that. So I think that helped a lot. As you said, like for me, it grew organically to get my realtor license. Like I was just investing initially, and then I started having my friends asking me like, hey, can you help me run numbers on this? What do you think about this house? What do you think about that house? How am I able to find the property? How can I get my first deal? So I was like, okay, there is something there. Like a lot of people are asking me about it. So I might as well get my license and being able to help them out with that and like hold their hands through the process. So that really helps that I am actually doing what I'm preaching pretty much. So most of my clients are investors and people that are buying their first, second, third, fifth, 10th deal. Usually investors, like it's been a hard market out there for sure for the last 2 years. Like we have higher taxes, higher insurance, high interest rate. That's been a big one. And that's right. Like not a lot of buyers, like a lot of buyers pull back and they decide to wait on the sideline. But for investors, if the numbers make sense and if you're able to find the deals and make the number make sense, they are going to buy anytime. So focusing on investors, I think that helped a lot. And yeah, investors been a really good one. And after that, referrals and going at networking events and speaking about what I'm doing and podcasts like yours, like spreading the word around. And yeah, that's pretty much, I think the power of doing it, it's been the biggest driver.
How do you find these properties? Are they on MLS or a lot of them off market or what?
Yeah, so property to be a good candidate for a perfect bar where you would pull most of your money out or all your money out, most of the time is not going to be on MLS. Sometimes it is, but when it is on the MLS, I'm talking like if it hits the MLS now, I'll have to call that realtor, go look at the house right now, like pick up the phone, go drive that way, see it, and make sure everything is fine and put an offer on it within the first 2 hours after it's listed. Actually, I bought one like in the beginning of this year, like that. They listed on MLS. They couldn't do showings until 2 days down the road, but they listed it for like 91,000, I think, and ARV was like 230. And I called the agent. I'm telling her like I'm gonna offer you full asking. I don't need to see it. I just drove by it. I'm fine with that. Eventually, they got another offer. I ended up buying it for 110, but was still a really good deal. And yeah, I was able to do that because I knew my numbers, and I was ready to move in as soon as possible. But most of the time, yeah, you're not gonna find those on the MLS. It's like that was an outliner, and you have to move really fast in order to get it. Most of my deals that I'm buying for BRRRRs and most of my deals that I'm buying for clients that they are planning to do the same strategy are going to be off market from wholesalers, like Facebook groups and all kinds of like networking. Like I have a big network of wholesalers that are sending me deals. Like my phone is ringing constantly during the day. I receive probably like 20 deals a day. Some of them are deals, some of them are not the best deal, but yeah, like staying in contact with them and being serious about buying when you're saying that you're going to buy and having strong clients that you vet and make sure that they are going to actually be able to close when you're committing to a wholesaler. I think that's really important.
That's awesome, man. So, man, let's unpack this a little bit. So, I'm a buyer, wanting to get into investment. I mean, you're the perfect realtor for me. In fact, I've sent you a client that was interested in investing, and because not only do you go out and do it, you're doing it yourself. You have 18 properties out there, and then you know exactly how to maneuver, how to coach them, how to educate them. How many first time investors do you deal with? A lot.
Yeah, a lot. I would say probably half of my clients are going to be first time investors. And yeah, like you come to me with like you maybe have an idea on what you're looking to do, but you kind of get a free training on what I know about it and what I would do in your place. So yeah, I think that's really valuable for people, and they really appreciate that the fact that I've been doing it for myself.
How hard is it for I know, and I know you know, but how hard is it for a new investor to get hard money?
It's not as hard. They are probably gonna require a little bit more cash reserves. And they are probably gonna require a little bit less of rehab. Like they are probably not gonna want you to go in your first deal and do foundation, roof, plumbing, like all the majors and a massive termite damage or something. They are probably gonna want to stick with like more cosmetic and stuff. And they're gonna probably want to have a little bit higher proof of funds that you have money on the side in case something goes sideways. But generally speaking, if you're eligible to get a conventional loan, which you should be able to get because on the back end you want to refinance, right? To refinance out of that private money loan. So as long as you can get pre-approved for a conventional loan, you'll definitely be able to get pre-approved from hard money, because hard money, they don't look at your taxes, they don't look at, it's much more linear, much more easier process. But you want to make sure that you're able to get out of that hard money on the back end. So you want to make sure you talk with somebody like you, David, and make sure they get pre-approved for that, because you want to start with the exit in mind and like, yeah, I'm going to turn this one into a rental property. I'm going to refinance it out after I'm buying hard money. What are my options? Am I going to be able to do conventional? Do I need to do a DSCR loan? And that's the first thing. And after that, they will be definitely, if you get them approved, they will definitely be able to get approved for a hard money loan. And then we can go and hunt for deals and find them a good one.
So Daniel, as we sit here, it's November 22nd, a week before Thanksgiving 2024. 2025 is just around the corner. What's the big plans for 2025? Where are you headed? What's going on? I know we've talked a little bit about you want to dabble in multifamily and commercial and some other stuff. So what you got planned next year, Daniel?
For sure. Yeah, so for now, I think I am, as you said, I'm looking into multifamily. I think it's kind of the time to probably branch out into more multifamily stuff. And instead of buying one single family at a time, look into like 20, 30 units and so on, and even bigger after that. I've been looking all this year also for multifamily. I didn't really see much of a deal there yet. So unless I find a really good deal for multifamily, probably 2025 is gonna be more of the same I've been doing for 2024, pretty much. So yeah, the plan is to be able to buy a house every 2 months for single family, and to be on the lookout and underwrite deals for multifamily, and hopefully I'll be able to get something for multifamily. But I'm really not in a hurry on that, because if there is not a deal, I'm not going to force a deal. I'm just going to wait it out until I will find the right one. And yeah, till there, I will just keep doing these small multifamily or single families.
That's awesome. One last question. With 18 houses, do you manage your own properties or do you have a management company?
I do. I still manage all of them myself. But yeah, eventually I'll have to get that outsourced. But for now, yeah, I'm still managing it myself. I have a virtual assistant that she's helping a little bit with some stuff and sending notices and texts and stuff to tenants. But yeah, I'm still doing most of the work myself. I need to start delegating more. So that's something I need to work on in 2025.
That's awesome. Well, brother, I can sit here and talk to you all day, but I know you have clients that you need to go help. What did we not talk about that we should have talked about? Any subject matters? Anything that you want to let the people know about?
So yeah, I think we touch base about yeah, let's talk about like what the market will do in 2025. People like to throw that out there, so we might as well make a
Prediction?
prediction about 2025
Well,
market.
let me start with that. So from an economic and banking viewpoint, and again, this is not me. This is the Banker Association,
Right.
the NBA. They're
Right.
expecting the Feds to drop interest rates about 6 times. Again, we can't predict that, but but the Feds are saying they're going to drop interest rates about 6 times. They're expecting interest rates to be fluctuating into the low sixes, possibly by the end of the year, the high fives. But for the most part, we're not going to see a reduction to 3, 4, 5, 3%. I think it's going to be a gradual decline. I think it's going to be flat throughout the year. But a 6, if interest rates can just stay in the 6, that's a healthy market. That gives people certainty. That gives people the ability to know what to expect. Where it's uncertainty is when you have an unstable market like we've had the last 3 years. It goes up, it goes down, it goes up, it goes down. And so whenever you have an unstable market, people just don't know what to predict. The second part of that is, going into 2025, they're expecting a 25% increase in purchase applications. So in total volume, a 25% increase from 2025 to 2024, that's a massive amount. The second part of that is the industry itself has shrunk a little bit. as you and I both know, about 50% of the realtors have left the market because of the tough times. 50% of the loan officers are no longer here. So I think the people that are left are a little bit more seasoned, a little bit more professional, and they know exactly what you're doing. Right now is the time to prepare for the new market. The reality of it is this, we with the 25% increase, we even though there's a lot of inventory on the streets right now, we're still in a very low inventory compared to what's out there. I'll give you a stat that's out there that a lot of people don't realize. There are 75 million millennials and Gen Z between the ages of 29 to 35. That's the prime age that you buy your first house.
Well, enormous.
Okay.
Yes.
75 million. You and I both know there's not 75 million houses on the market, and there's not going to be 75 million houses on the market for the next 5 or 10 years unless the government steps in and also starts going into construction. So with that amount of people looking for housing, where's it going to come from? So just the pure supply and demand, I think it's going to be very competitive. I think housing is going to continue to rise. So as from an investor standpoint, I think it's great. I don't think we're going to see the 10 to 20% we saw in 2020 and 2021, but let's be honest, a 3 to 7% increase year over year, that's a pretty good investment.
That's a pretty good return. I would agree with that. Yes.
Yeah. What are you thinking out there, Daniel? What do you see?
Yeah, I pretty much agree with you. I think, and I'm looking forward for the rates to come a little bit lower in the low sixes, maybe high fives, hopefully. And definitely that will allow more buyers to come back on the market. Like we've seen that in the middle part and beginning part of the year when the interest rates dropped into the low sixes, like a lot of buyers flocked into the market. Now when they are back up to like almost 7, it's a little bit more like people are a little bit more reticent about getting into it. So that's a direct correlation for sure with the buyers activity. But yeah, I think probably the volume is going to increase. It's going to be more buyers out there. More people are going to be looking to make a move. We've been seeing amazing, like even though people were expecting a market drop in 2024, we've been seeing growth in the market. Like in Houston, the average price grew by 5.2%. So that's quite a big growth for the third, fourth year. Like we've seen growth for like 10% on how much we've seen in the pandemic, like we've seen double-digit growth. And now this year people were saying that it's going to be a correction, right, to come back to normal, but we still see 5% growth, which is great. So I'm expecting to see kind of the same amount of growth in prices. Probably the volume this year also increased for about 20% in Houston, which is quite a bit of increase in volume, and we expect that to increase again in 2025. So yeah, we're looking forward for a pretty strong market. The wind is going to start blowing a little bit in our favor now with the interest rate dropping a little bit, and looking forward for a good year.
That's awesome, man. Well, it's been a pleasure you being on the show. So if the people in Houston want to find you, and I know they do, Daniel, how do they find you?
So best way to go get in contact with me will be through my personal phone number. Give me a text, give me a call. My phone number is 630-822-6589. I still have my Illinois phone number because when I moved to the States, I lived in Chicago for a little bit, and then I moved to Houston. I never changed it. And people always ask me like, yeah, you're a realtor in Houston, right? Yeah, but I see an Illinois phone number. What's going on? And I always said like, well, I live in Chicago now. I'm back in Houston. I never change it. So maybe should do that at some point. But best way to reach me, give me a call at that number, and I will be more than happy to assist with any helping you comp a property, or if you're looking to get into investing, I'll be happy to help.
And if you're watching that live, you saw that number go across the lower thirds. So, and I know they want to find you. So if you're looking for a house in Houston, Texas for your first home, or if you're looking for investment properties, call Daniel. He's your guy. He's definitely can help you out. I'm David Wynn. I'm with the Mortgage Edge podcast. Thanks for being with us today. Bye, guys.
All right, guys, that was the interview that I had with David. I hope you learned something out of it. Let me know down in the comments what you thought about it. And keep in mind that the only constant in real estate and in business in general is that the market is always changing. There is always a new event that's happening that is going to make you more profitable with one strategy and less profitable with the other. That you need to always adjust your strategy in order to be able to thrive and grow in this business as in any other business. And that's what we need to take for 2025. We need to adjust our business to be fine with higher interest rates and lower interest rates. We need to adjust our expectation that probably the market is still going to stay a little bit unaffordable for a lot of people. The interest rates probably are going to still be quite high compared to what it was before the pandemic, but we have to be ready for that and go out there and take action and make that work with whatever the market is going to give us. Alright guys, thank you very much for watching. Let me know down in the comments what you thought about it. If you have any suggestions for new topics, please subscribe to the channel, and I will see you next year. Merry Christmas and Happy New Year. Bye.